Started with $1 in a dream. This one for all the people that said I couldn't do it.
Good day, Jesus.
You know the best.
Welcome to lesson 4, and thank you so much for making it up to this lesson. On this lesson, we'll be looking at the candlestick pattern. And the topics that we'll cover in the candlestick pattern is the shooting star and the investor, the engulfing candlestick, and the candlestick momentum. Those are the topics that we're going to cover. Let's take a look at them. Okay, now let's start off with the shooting star. If we take a look at the screen, we've got two candlesticks, the red one and the green one. And the reason I've got them like this is that they mean one thing. As long as it's a shooting star found on, so it means one thing. It means one thing. So let's take a look at this. Let me see. Let's look at why I say so. Okay, what it means that is the if we take a look at this one, price is open here, closed here. It went create a low, but then the bullish momentum were strong. The bullish momentum was strong. That's why it couldn't close anywhere below or let's say half of this. Anyway, let's say anywhere below half of the candlestick, including the wick. And if you take a look at this one, prices open here, it closed here, and the lows were at this point. Meaning that prices open here, it went and created this low, but then came back up. So what it means is that if we take a look at it, means that price opened, it went all the way down. The sellers were trying to take over, but they couldn't win the specific time interval. Let's say if you're looking at the 1 hour candlestick and it printed something like this, what it shows is that the sellers were trying to take over, but then eventually at the end, when the candlestick closed, the bulls are the ones that won at the specific time interval. That's what it means. This is what it means. So meaning that we can see that since the bulls have won at the specific time interval, it shows that the bulls are now taking over. The bulls are now starting to be strong. So you can expect something like an upward movement. That's why you can see it's written here, formed on support. If you find this specific candlestick on support, type of trend, downtrend, meaning that if it's forming a downtrend and then now it's on support, then we find this candlestick right here. What we can expect, our next move is up. It shows that the buyers are now, they were trying to break the support, but then they couldn't. Eventually the bulls won at the specific time interval, and then we can expect something like a uptrend. Type of signal, it's a buy. So meaning that this candlestick, it only means something when you find it on support. If you don't get it on support, you don't have to take it as a signal when you just find it in the middle of the chart. But when it's on support, that's what it means. And one thing that I like about this specific candlestick is that when you see it on support, you don't just trade it. It's just adding to our confirmations. And as we go on with the lessons, we'll see more and how to utilize these special candlesticks and everything that's needed. So we saw the shooting star. Now let's move on to the next one, which is the inverse shooting star. Okay. Now let's take a look at this. This is the same one as the previous one, but if you look at it, it's in the inverse manner. Okay, what do you mean by that? This is the red one and this is the green one. It represents one thing, meaning that, okay, if you take a look at this, price is open here, price has closed here, price were once high at this point, but they couldn't break there or they couldn't close there. They were once high at that point, but then they couldn't close there. And if you take a look at this one, is that price is opened right here. Okay, here price opened here, price closed here. You can see it's a red one. Price here. Okay, this one price is open here, it closed here. This is the high, but it couldn't close anywhere around there. So what it means is that let's take a look at it. Let's see if price opened here, they went up, tried to break. Let's see if it's at the resistance. They tried to break the resistance, but then the sellers are now gaining strength, meaning that the bulls are trying to win over the sellers. But when they got to this point, the sellers are like, no, we are now gaining momentum, meaning that we are pushing you guys back downwards. We are now pushing you guys back downwards. And in this time interval, the sellers were able to win because they managed to push the bulls back down below the half of the candlestick. Meaning that if we take a look at this is how the candlestick closed. This was the open, this was the close, this was the high that it created, but it closed here. So it doesn't matter anymore. We can just use this as a type of signal, meaning that we can use it to see that, oh, the next move from what we can expect is that since the sellers are now taking over, we can expect that the sellers are going to win in the next few hours or few days. If you're looking at the daily candlesticks, we can say a few days. If you're looking at the hourly, you can say a few hours. So meaning that if we find this type of candlestick at resistance, that's where we can look at it as a type of confirmations to our signal. Meaning that if let's say the type of trend that it's in, it's an uptrend, it's moving up, then now it's at resistance. Let's say something like this happens, down and then resistance, and it forms this kind of candlestick, any color. The color doesn't matter. It's the candlestick that says it, because it shows that the buyers were trying to take over, but then at the end the sellers won. That's what it means. So if you look at it and then we find it at resistance, we can take it as a type of signal, a type of confirmations to show that it will go down, since it's at the resistance, and it showed that the buyers couldn't win at this specific time interval and the sellers took over, meaning that now we can expect a downward move. Next move, we can expect a down move. And the type of signal is a sell. We can look at this candlestick as a sell type of signal. Okay, now let's look at the next one. Okay, we've got an engulfing candlestick. Okay, so what the engulfing candlestick represents is that if we take a look at it, this is a red one and this is a green candlestick. A red candlestick and a green candlestick. A red one, you know that it's sellers, and the green one is buyers. The buyers and the sellers. The bear and the bulls. So what it means is that if we get this kind of specific candlestick pattern at support, we can expect that now the movement is upward. Okay, what does that mean? Meaning that if we're now moving down, and now we want support, any type of support, and then there's a candlestick, the sell candlestick, and then the next one that opens up, and closes as a strong buy candlestick, a strong bullish candlestick. If we take a look at it, okay, let's do some candlestick mathematics. What this actually means is that if you look at it, the price opened here, it closed here. The next one, the price opened here, it closed here. Let's say if we're looking at the 1 hour, this is the 1 hour. So this represents 1 hour, this represents an hour. So now if we move on and say, let's look at it in the 2 hour manner. Okay, the price opened here. That means we have to what? We have to add these candlesticks. The price opened here. The low happened to be here. This is the low. So we can look at the low happened to be here. Price opened here. But then price eventually closed here. So if we take a look at it and we draw this up, we can see that this formed a star. I hope this doesn't confuse you guys. Like, it's just as it seems. This is an hour one. If we add these two candlesticks, we add them. This is the open of the first one. This is the close of the second one. This is the open of the second one. Okay, this is the open of the first one, the close of the first one. This is the open of the second one, and this is the close of the second one. So if we now add these two together, we add these two candlesticks. This is the open, close, the open, the close. So what matters is the first open and the last close. The first open and the last close to add up to 2 hours. And this is how the candlestick is gonna look. It's gonna come up as a star. So what it means is that if we find this type of pattern, this type of engulfing candlestick at support, it shows that our next move would be up. We can expect an up move to show that the buyers are gaining momentum. The buyers are gaining momentum. And the type of trend, you find it in a downtrend at support. Our type of signal is buy. The type of signal that it will produce is a buy signal. It's a buy signal. Now let's take a look at the next one. We've got a engulfing bear candlestick. Engulfing bear candlestick, meaning that we can see that price came up, price was moving all the way up, it got to resistance, or let's say it formed at resistance, formed at any sort of resistance, it formed there. And let's say now it was moving up in an uptrend, it got to resistance, and then it formed this type of pattern here, this one here. So what it means is that the bulls were trying to take over, but in the next time frame, the cells or the bears took over. As you can see that the cells came back down with the strong momentum, strong candlestick. That shows it explains the sort of like the same candlestick mathematics that are done at the previous one, at the previous example of the bull engulfing candlestick. So now what it means is that formed where if we find the engulfing candlestick, it only matters when you find it at a specific price area, meaning that at support or at resistance. That's what it matters. That's why it only matters. But then if you find it anywhere on price action, it won't mean a lot to us, as we'd find it at a specific price action or critical area, and we'll see that in the next chapters. So now if it's in the type of trend, uptrend, the type of trend, if it's an uptrend, and the next move is, we can expect the next move to be downwards. This is what you can expect from it. It shows that the bears are now strong. It shows that the sellers are now strong. They came back with the strong momentum. And the type of signal, we can see it as a sell signal. After seeing this candlestick, we can see it as a confirmation to ourselves, meaning that we've been waiting to sell. We know that when we get to that resistance, we're going to look for a sell opportunity, we're going to sell. And if it does from something like this, engulfing candlestick or investor, we know that it gave us a confirmation, meaning that if we want more confirmations, so we can be confident taking the trade, we can wait for more confirmations. But then this is a tool that we can also use. It's a tool. We don't use this to won't say we're selling because of this only. For us to sell, we'll be looking at this happening at a specific critical area, specific pattern formed, and all those. So there was a bear engulfing candlestick. Okay, now let's take a look at candlestick momentum. Okay, so what does this mean? I kept on speaking of candlestick momentum, and I hope I never confused you guys. Okay, so what this means is that if you take a look at it, is this, let's say for instance, we've got a candlestick here, and we've got another one. Okay, this one, we've got let's say this is a green one, meaning that this is the open, this is the close. And let's say we've got something like this, and we've got the next one, this is the open, this is the close. So the next one, the open, will be at the close of the previous one. So let's say this is the close, the open, I mean, and this is the close, and we've got something like this and like this. Okay, the color doesn't matter as long as you guys can see what's happening. So what does candlestick momentum mean? It means that if you take a look at this and we add them up, like let's say if we're looking at the 1 hour time frame, meaning that one candlestick here represents 1 hour. It represents 1 hour. But now if you take a look at this one, this is an hour and this an hour. If we add them together, it will result to 2 hours. If we add these two candlesticks together, it will result to 2 hours. So what do we mean is that this was the open, this was the close, this was the open, this was the close. So price opened here in 2 hours, ne? and then price closed here. Ne? But then in the 2 hours, price was once low at this point, meaning that here at this point, and during the 2 hours, the same price was high at this point. So we've got a candlestick that will be formed like something like this, a young wick and another small wick, and you can see the body is huge. The body of the specific candlestick is huge. The body of this candlestick is huge. As you can see, this is the hour one, the first hour, the second hour. We add them up together, it will result to a candlestick that will be formed like this. This is how you do your candlestick mathematics, meaning that if you're looking at your 30 minutes candlestick, and you add them up, you just add 2 candlesticks up, and then you come up with the candlestick that you're able to see, and then you move up and then you look at your 1 hour candlestick. It'll be the same 30 minutes candlesticks that you saw, just added up into one candlestick. You shouldn't forget that, guys. And if we take a look at this, okay, let's look at how seeing the momentum of a candlestick. Okay, let's say now we've got a candlestick here, and we've got a wick. Let's say here's a wick here, and another wick here. Okay, to calculate the momentum of a candlestick, to see how strong that specific candlestick is, okay, what we can do is that we take the high and we take the low. Okay, the low, the high, and we get the half of it. Okay, now let's just do using approximate measurements. Approximate measure, meaning that we're not very accurate, just using it visually. Okay, now let's say this is the half of it. This is the half of it. So meaning that if we take a look at this, okay, let me put on, let's say here, in this section here, it's the bulls. And okay, we saw that. And in this area here is the base. We've got the base in there. So you can see in this area here, it's the bulls area. This whole area from the top half, actually. The top half of this candlestick is the bulls area. The bottom half is the base area. So now, what the momentum actually means is that if price happens to close, the opening doesn't matter now. If you take a look, we're looking at the momentum. If price happens to close above the half of the specific price of the specific candlestick in the specific time interval, if price happen to close above the half of this specific candlestick, it shows that the momentum is in the bulls momentum. The momentum is in the bulls momentum, meaning that if price opened here and it closed here, it shows that the momentum is in the bulls momentum. But now another thing to make it more effective is that we divide the bulls one into halves and the base one into halves. Okay, we can't be very accurate. So now what it means is that if price happens to close in this half, if price happens to close in the top half, it shows that it's in the strong bulls. The price closed as a strong bull candlestick. It doesn't matter what color it is, whether it's a red one or a green one. What it means is that if price happened to close above the half of the candlestick, it shows that it's in bulls. But then if it closed above the half inside the above candlestick, meaning that at the specific half, the top side here, it shows that it's in the strong bulls. It has this very, very strong bull momentum. Very strong bull momentum. And the same thing applies, the same rule or scenario happens. We can apply it at the base one. If price happens to close below the half of that specific candlestick that we're looking at, any candlestick, whether it's a daily, 4 hour, 1 minute, anything, as long as if price happen to close below the half of the candlestick, we can see it as being a bear bear, we can see it as being a bear momentum. Any bear momentum doesn't have to be strong, but then if price happen to close below like the specific area, we divide that half, that bear, we divide that bear, the bear candlestick, or the bear half into halves, the bear halves into halves. As you can take a look here, this is a bear half. We divide it into halves, and then if it does close below that half that we have divided into, below somewhere around this one, we can see it as being a strong bear. This side is a strong bull, this side is a strong bear, and in this half we call it a weak bear, and this half we call it a weak bull. That's right, we call it a weak bull. So this is how to calculate a momentum of a candlestick. So it doesn't give us any specific signal. It is just to show us like how to get the momentum, how to fully gain confidence that we are now experiencing a very strong bull momentum or a very weak bull momentum or any type of signal like that. But we don't use this as signal. This is just some extra knowledge that you can take down. Some extra knowledge that you can do. You don't need this to generate a strategy or anything from it. So okay, I believe that we saw the candlestick momentum. I believe that now we saw the candlestick momentum. Let's move on to the real-time market. Real-time market. So what I've got here is a shooting star. This is an example of a shooting star. What happened with the shooting star is that regardless of the color, whether it's green or red, it has the same characteristics. Meaning, if price were to open here, right here, and then price were to close above here, and price were to, the low that it reached were to be here, what happened is that this is a real body, and this is a wick. So price opened at this point and then it closed at this point. But then price during this time interval, let's say for instance we're using 1 hour. During this 1 hour interval, price was able to be at this low, but it couldn't close here, which is why it created a wick. It went back up and then it created with the bullish momentum, meaning that the sellers were trying to take over. Up until this point. That's why price was once low at this point. And then the buyers eventually managed to take over, and then the price happened to close here. So using only this candlestick, you're able to use it as a signal. You're able to use it as a signal. And how you can interpret it is that you can see it as price came down. Where's that? On my brush. You can see this price came down and then you tested support. And once price tested support, price was experiencing a downtrend, and then we came on a support, and then you get a candlestick like this. This is one of your confirmations that you're gonna use to enter a long trade, whereby it's showing you that the sellers were trying to take over, but then they couldn't take over no more. So now we're expecting what? A bullish momentum, and we can experience something like this from now onwards, and it'll go back up. So the characteristics of this pair is that, of this candlestick is that it's like you can get it anywhere on the chart, but then where it matters most and where we'll see it as a buy signal is when we find it at a support. And not just any support, but then a support of a downtrend. And how can we interpret it? We can believe that the next move from here onwards is what? It's to go long, it's to go upwards. Since we saw that the sellers were trying to take over, it's on support. The sellers were trying to take over, but they couldn't win during this time interval. And
the bias or the bullish momentum is strong and it manages to push the candlestick upwards. So from now onwards, you can expect an upward movement. So that is the type of the type of signal formed here is a buy signal. And one thing that I like to is that you shouldn't forget that regardless of the color, whether it's red or green, if you find it on support, it means exactly one thing. So let's look at it in real-time market. Okay, here's one right here. This candlestick here, the same characteristics. This candlestick here, price opened here, it came all the way down here, but then it eventually closed up here. So this is a star. This is a great star, and it's on support. If you look at it, this is on support. So what happened afterwards? Price went up. It went up. Bullish momentum. And let's look at the inverse of it. Let's say it happens that this is okay, like I explained with the previous one, the buoy, the weak. Let's say this is a green candlestick, meaning price open here and price close here. And during this time interval, let's use the 1 hour for instance. During this time interval, price was once at this high. It was once at this high, but then it couldn't close there. So which is why we managed to go all the way back down and close here. So what does it show? It shows that the buyers, like it has been an uptrend, and then the buyers, when they got to this point, they started losing momentum. This is why it created the signal. They started losing momentum, and then the sellers were able to take over during this time interval. Meaning that what you can expect next is a downward move. But again, this only means a sell signal only if you find it on resistance. So let's look for one on the resistance. Okay, here's a nice one here. It doesn't matter, like the color, regardless of the color, red or green, doesn't matter. As long as you find this on the resistance, I mean, it has the same characteristics. Here's one here. It has been an uptrend. It's on the resistance, and then it formed an inverse shooting star. It formed one. It opened, price opened here. It closed right here. During this 1 hour interval, I'm using 1 hour. Price was once this high, but then the sellers took over. So this is what we expected afterwards. A downward. The price now went and created a new high. It came all the way down, impulse all the way down. It gave us maximum profits. So, like, how can we read this type of signal? Is that when it's formed when it's formed in an uptrend, meaning that when it has been an uptrend going all the way up, in an uptrend, and then once it gets to resistance, it forms this type of signal. It can be that it's a major resistance from something else. It forms this type of candlestick. And once it forms this type of stick, it's from an uptrend, it forms this type of candlestick at resistance. The next move would be expecting to see what? A down move. So we can utilize this as a sell signal. This candlestick, we can utilize it as a sell signal. This candlestick, we can use it as a buy signal. And now we'll be speaking of the engulfing candlesticks. So what happens with the engulfing candlestick is that once it happens that let me explain this one, the concept of the red and the green one. Once it happens that you're involved in a downward trend line, and on support, on support, you get some kind of a signal like this. It's a bearish candlestick, and then followed by a bullish candlestick. And now the bullish candlestick has way more momentum than the bearish candlestick, meaning that the buyers are now starting to take over. The buyers are now starting to take over. So this can be seen as a bull signal. And that's how the engulfing candlestick works. How it works is that once price gets to a key area, meaning support or resistance, and then if it's coming from, it's an uptrend, and then it gets there on resistance, it gets on resistance with this type of manner, a bullish candlestick, and then followed by a bearish candlestick, and that bearish candlestick is way larger than the bullish candlestick. It has more momentum than it's more powerful than the bullish candlestick. It shows that the sellers are now strong. They gain strength. The sellers are now strong. And if it's on resistance, the type of signal formed here is a sell signal. If it's on support, the type of signal formed here, is a buy signal. Here's an example of one. It has been going all the way down, all the way down, all the way down. When it got here, here's a red one, this one here, here it is, and here's a green one, engulfed. And what happened from here? Price started going up. It came to retest and it continued going up, went up. And here's one too. Price was going up. It was going up. It got to key area. This can be seen as resistance, because here it could have been seen as support, and then it broke support. It came tested resistance. It formed this two is a great signal, because this two is an inverse shooting star, and two it's a engulfing candlestick, showing that the momentum of the sellers are strong. So here you place the order and then you ride it. You go down with it. And that's how the engulfing candlesticks work. And one thing that I like about these candlesticks is that you don't take them as a signal. You don't just see this candlestick presenting itself and then you say, I want to buy, I want to sell. You have to wait for it to happen on key area. And once it happens on key area, you use it as a confirmation. Like it's a confirmation if you are looking to sell. And that happens, you have now confirmed yourself. Instead of just seeing that candlestick happening anywhere and then being involved in a trade. And now we're going to move on to the equivalent candlestick, where the buyers and the sellers are undecided. Where the buyers and the sellers are equivalent. The buyers and the sellers are equivalent. So what happens is that in this manner, this is a red candlestick. So we can see the price opened here, and then price pushed here and closed here. This is the closing, this is the opening price. But what can be seen as is that once price opened here, it managed to create a high of this level, and it managed to create a low of this level, and still it managed to close here during this time interval. And if you read the wicks are actually equal to one another, meaning that the buyers and the sellers are undecided. Meaning that this, like all of these candlesticks, they mean something when you get them on key area, meaning support or resistance. So this can be seen as if it has been going up. If you were experiencing an uptrend, it has been going up, and it's on the resistance, then it prints this. We can now start looking for sell opportunities, but we have to wait for them to present. This is just a confirmation of that. A bullish momentum is now running out. So what can happen is that this, from now onwards, we can experience change of trend. And the same characteristics happens for the inverse. when we are on a downtrend, we get to support, the same candlestick presents itself. We can read it as a change of trend. It'll just help us confirm our setups, meaning that we won't see this candlestick and then we'll jump in the trade. We'll wait, or if I've got a pattern drawn here, and it's a pattern that shows we're gonna break to the upside, I can take a risk entry. I can just see this candlestick showing itself somewhere here on support, and then I can jump in. Then once it breaks here, I confirm that I'm going up. Then I go up with it. So these are confirmations of taking a trade, not signals, but confirmations of taking a trade. And I believe that they're going to help us be involved in great setups and be able to maximize profits.
Thank you for watching and joining us on this lesson. We're looking forward to seeing you guys at the next lesson. Thank you so much.